Okay, so we have some new information on Russia's continuing gold saga. The important part, though, the part to watch, might be getting buried by all the noise. Okay, so on Sunday we got some news. News that the US, UK, Japan, and Canada plan to announce a ban on gold imports from Russia. Now, that alone really isn't big news. Some of this is just a formality since several countries have really already done this. They already have moves in place. The LBMA removed Russia from its accredited list back in March, so the ban is really just being formalized on Tuesday. The timing here is very important, though, since it lines up with a possible debt payment default. If and when that happens, that'll be the first time that Russia has had its first default in over a century. Now, once that ban is in place, you're not going to be living dangerously if you have Russian gold coins. This is more about Russia being able to dip into its gold supply, their backup fund, I guess you'd call it. And at the international level, it's about gold's role in money supply and its viability as a payment for commodities. Why does this even matter? Well, first of all, Russia is the world's second largest gold producer, right after China. They produce about 10% of the world's annual supply. So the global supply would theoretically be disrupted, and that would hypothetically increase the spot price of gold. But again, the action against Russian gold imports has already happened, and Russia can still trade gold with countries like China and India. So that's a lot of demand that really doesn't care about this ban. And Sunday night's markets opened with a little bit of a bump in gold price. All kind of came back down. So there's really not much of a story there. The part to watch is still ahead. So what this ban is meant to do is to further jam up Russia's ability to stay liquid and to work around the current sanctions. And we're going to come back to whether or not that's actually working. Let's get the timeline laid out first. So February 24th, that's when Russia invaded Ukraine. And the sanctions, they came fast. And by March 7th, so what is that, 2 weeks later, the ruble had lost 40% of its value. So on March 25th, what seemed like a really smart move, Russia announced that it would buy gold at a fixed price for the next, I think it was 3 months. And then they followed that announcement saying that they would only take payments for natural gas and other commodities in rubles or hard assets like gold. So the first announcement, that pegged gold to rubles in a way. And then the second seemed to create a model for direct payments in gold. And lots of commenters started calling that a gold standard. Now, I've already made a video on why it was not a gold standard. I'll get that linked in the end screen and in the description, but that is a moot point by now anyway, because on April 7th, Russia's central bank had already canceled that commitment to the set price for gold. The reverse peg of gold to rubles, that is no longer in place. But the move did help shore up their immediate currency crisis, and it's probably a series of moves, but even though they didn't get the system off the ground to take payments in gold, it showed that that possibility exists. And that's what Sunday's announcements were all about. Or I guess they were pre-announcements. G7 countries are now officially trying to jam up Russia's ability to use its gold. Those prior efforts, I guess they weren't enough. I have to wonder how much of this is just saber rattling and how much of it's actually doing anything, but I would say that this whole back and forth shows us two things. First of all, it shows us that gold is relevant on an international scale, not only as a quiet financial asset, but actually is a viable means of payment on a massive scale. So if nothing else, this shows us that gold is not an antiquated commodity. The ruble actually hit its strongest level since 2015 this past week, and gold played a part in that. And then second, it shows us how hard certain players are working to prevent that possibility. That possibility of it becoming an international unit of exchange. We're going to have to come back to that one in a later video. Those two ideas, though, they do not cancel out. It's clear how valuable gold is, and the new attention is only making it more so. When you have G7 leaders hitting Twitter, announcing plans to block imports of Russian gold, there's no denying its relevance or its value. And that message is going to get a lot of attention. So as far as the price goes, though, I think that it was a stretch to say that this one announcement would send the price of gold up. I just don't see how this directly affects price after the news fades. But the relevance and the overall awareness of gold, well, that's going to stick around. I think that we will see that more people will become more aware of gold's monetary possibilities. So even if we don't see an initial jump in price, I think all this attention proves that it's still seen by governments as a serious factor in international trade. And this at a time when the price of Bitcoin has cratered and the stock markets have crashed. Gold seems to be getting a lot of respect right now. Back to Russia. Last week, the ruble hit its strongest level in 7 years. And it's not because they've implemented a gold standard. The idea that they might be moving to one, that probably could have lasted about 13 days. That's the amount of time between the announcement that they'd buy gold at a fixed rate in rubles and then the announcement that they'd quit. So it didn't last long. Russia is doing a lot of things to prop up the ruble. They raised interest rates to 20%, and that incentivizes Russians to save rather than convert rubles to other currencies. Businesses, they are required to convert 80% of foreign profits to rubles, regardless of the exchange rate. And there's a lot more going on, but probably the biggest prop for the ruble strength was requiring countries to pay for natural gas in rubles, or they did mention that they would take hard assets like gold. I'm not sure, though, that there are actual cases of payments being made in gold at all, but I don't know exactly how that would help them right now, even if there are. The ruble is obviously going to be their focus. So the effect on gold at the moment is more about it being in the news than it being in circulation. I don't see this playing a big role in price movement personally, but I do imagine gold producers in other countries aren't sad to see it. The thing to remember here, though, is that we haven't seen the price of gold tumble after the Ukraine invasion. And I think longer-term price movement is going to have a lot more to do with factors like inflation than it is to do with things like gold supply. As for personal sentiment, gold is at 1825 as I'm recording this, and I'm buying under 1850 really. This right here, this new gold buffalo, this is a new purchase. And this one, if we're keeping count, this puts me at an even number of buffaloes plus one. I have this proof buffalo that I really can't make myself drop into a mint tube. It's too shiny. It feels like it's its own thing. So I'm back to a tube and a half officially. Now, I grabbed this one online when spot was just under 1810. Premium at the time was 6%. The coin came out to be 1928, but I did some quick math and that just doesn't work out. I think probably the online dealers tend to list spot price a little bit higher than ask. And I imagine the site showed spot at 1818, about $10 more than it actually was. No big deal at all. Being able to pick up a coin for less than $2,000 all in still seems like a deal to me right now. The only purchases that I've made this entire year that have gone over that $2,000 mark have been collectible purchases, happy idiot purchases. And I'm okay in those cases too. I'll be able to get out what I paid if that's what I decide to do. So none of this new news seems like a reason to run out and buy up everything you can get a hold of. But there are a lot of other reasons that I'm still buying personally. Food and oil costs and inflation in general, that's a big part of it. But I don't think anything has changed with my plan to maintain a solid backup plan. I'm at a point where I can slow down if prices do go up. And if they go down, I really only get excited if prices drop significantly, like 15% or more. But I think that we're in neutral territory for a while. The thing to watch is food and oil prices. This is related to the invasion, and in a way, an increase in gold price could actually be related to the ban of Russian gold, but not in the way that we might think. If the price does go up, it's most likely going to be due to further inflation, not to Russian gold supply issues. Okay, so I think that covers it. Let us know if a ban on Russian gold does anything to your desire to buy more of the stuff. Now, I'm watching inflation coming from that invasion a lot more closely than I'm watching a gold ban. I think that that's where the possible impact on the retail market for gold comes from. But let us know what you think. And then while you're there in the comments, be sure to hit that like button if you found any of this interesting. Make sure you're subscribed with notifications turned on if you want to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.